afternoon, everyone. I'm excited to be here today, and I'm really energized by this really impressive audience. Let me start by saying that we are fortunate to be where we are today, and I'm not just referring to this convention center, but referring rather to a really golden period for financial services in India. If you take the banks, for instance, the banking sector in India is regarded now amongst the very best globally. If you take valuation as a metric, the best Indian banks are today valued better than most banks in any other country in the world, large or small, developed or developing. To add to it, we're in the midst of a real digital revolution in India. I'm not just referring to the 650 million people with smartphones or the 70% of rural farmers who have instant messaging apps on their phones, but rather to the unprecedented digital rails, whether it be UPI, DigiLocker, account aggregator, and a whole bunch of others, all built on the Aadhaar platform. All of this promises to democratize financial services and also make it much cheaper. All this becomes even more important in an era when AI is threatening to disrupt financial services. The future of financial services is integrated omnichannel. With recent advances in AI, call centers, as we know today, are unlikely to exist. Rather, we'll most likely have multimodal customer engagement with text, voice, video, all available through machines or through humans in a seamless way. Most financial institutions will go to level 5 personalization, which refers to n equal to 1 real-time engagement, not just on products, but also on content. Even core systems will move to the cloud. You have also a situation where AI will enable embedded finance in a much more effective way. All of this, of course, needs better data and cyber capability to make sure privacy and customers are protected. Now, with all these changes, you would assume that it's all hunky-dory. The study, which Bhaskar referred to, offered some interesting insights, which shows that we're still quite short of the potential here. The study showed that only 1 in 3 searches resulted eventually in a product of sale of any form, online and or offline, and that too at pretty high cost. And all the product density is pretty low as compared to offline. This is something which most financial institutions refer to when we talk about consumer marketing. A deeper study needs to be done to understand why that's happening, but here are some of the failure modes. First, most financial institutions tend to continue push sales online, as opposed to engaging gradually with consumers and building trust online. Data often is from dozens of source systems, which even if in the same place, actually lack the golden source of truth or the data lineage, which allows you to let loose a machine on this data. Product silos lead to a situation where customer communication is cluttered, and tech and talent can be real bottlenecks. So what's the way out? Enterprises in this AI-driven world need to think about AI capability in a much more full-stack, enterprise-wide way. One of the ways to think about this is across 4 layers. The first is the engagement layer. This is where you interact with customers. The second is the analytical layer, where all decisions are made. The third is the data and the core tech layer, the core engines of the bank or the financial institution. Then, of course, most importantly, the operating model and how talent and tech work together in a way that can lead to better outcomes. Getting this right has tremendous value. For starters, there are 300 million internet users in India who are not yet being accessed by the BFSI sector. And if you take those who have been accessed by the financial services players, there's tremendous opportunity still in terms of 50% higher conversion, up to 30% better cross-sell, up to 40% lower cost, and much higher speed. All of this would mean much better customer experience, much higher revenue growth, double-digit revenue growth, and a 30% lower cost-income ratio. All of this would bode well. With these opening comments, I'd like to invite Thomas Kurian on stage to share his thoughts with us on this exciting set of trends. Thomas, welcome. We are delighted to have you here.
Thank you for having me. It's great to be here.
Thomas, it would be wonderful to start with your perspective on financial services in India. Financial services has always been a technology-driven business. It's going through yet another disruption with AI. What would you think are the biggest opportunities for financial services players in India?
You know, financial services in India has a number of things going for it. And the first one, I think, is that in order to broaden access to many more people and to bring them into the financial system as a whole, given the scale at which the population of India is, you have to get really good at doing it digitally. The second thing we see is that with initiatives like UPI, ONDC, and other things, many of these products increasingly are going to shift from traditional batch or latency-oriented to real-time. And not just payment, but also things like credit issuance, advisory services, wealth management, and other things. And so there's also a shift going to happen from traditional processing to real time. When you do that, you need to really think through how you're going to change your core systems, but also how you interface the core systems with new technology that can support the requirements of the new way of doing real-time transactions, real-time credit scoring, real-time fraud prevention, real-time analysis, and to address those while you're dealing with increasing regulatory concerns, new regulatory requirements, and other things. So we fundamentally believe that there is a great opportunity to transform technologically the financial system as a whole, improve access to financial services, reduce latency and risk in the financial system using technology.
Very exciting. I think you mentioned this real-time word a few times, and I think as you think about that and the big shift that financial institutions need to make, what has been Google's AI strategy, and where do you see, how are you helping clients actually make this transformation?
We've helped clients around the world. You know, if you look at the leading financial institutions, the leading security firms in the world, almost all of them are clients of ours. We help them think through every element of what they're doing and using AI to really change it. So we start with how do you think about originating product? And originating product, for example, when you have very little information about people, how do you determine who to lend to, given you have so little information and you're trying to reach out to new customers? The second, how do you think about distributing these products? You talked, Renny, about just reaching out on digital channels. People are having a hard time being effective in getting customer conversion. You can use technology that we offer to help convert clients in a much more efficient way, not just to buy a single product, because everybody typically starts with one or two products, but then how do you also use hyper-personalization to be able to then cross-sell and upsell them more products to deepen the relationship. The third one, what to do with digitization, particularly around more complex services. Transactional services are easy to digitize. I want to move money from here to there. I want to buy something. But advisory services are much harder to digitize. Historically, they've also been people-oriented, and historically, they've had to have a physical presence where people go to a branch to talk to somebody. How do you digitize them? There are many institutions that are doing that now in very sophisticated ways, including how to serve high net worth individuals with services that are advisory. Fourth, as you broaden your reach, what can you do with AI and ML to automate the back office and automate the way that you're processing instruments, automate the way that you're tracking risk, automate the way that you're looking at efficiency in the system. And finally, we have many institutions that we work with that have digitized the entire customer interface, all the way from offering customers products and services, helping them schedule appointments, helping them understand and automating the call center. So these are all the different ways. Here in India, we work very closely, for example, with HDFC Bank, with Federal Bank. We have many neo-banks working with us in different parts of the world, and we have many payment companies also working with us to run their infrastructure on us.
You mentioned a bunch of the advisory, the more complex ends of it. Now, let's shift to where all the discussion is around Gen AI. How do you separate the hype versus the reality? How do financial institutions get started? How do they focus? How do they get going?
Now, I'll talk about the work we're doing with Deutsche Bank, one of the largest financial institutions in Europe. We started with, we today have 29 different scenarios that we're working with them on, and they've demonstrated it at many conferences around the world. We started with 3 specific areas. The first one, transforming that customer interface. And what they wanted us to help them with was using our generative AI platform to create very efficiently hyper-personalized offers, not just based on an individual, but based on, for example, an entire family and their financial needs, as well as for businesses of various kinds, all the way from small manufacturers to large, complex institutions. So the first one was, how do you define and reach customers with offers in a highly personalized way? The second area was using the tools to transform the customer interface. And what we've seen works well is looking across all the channels. So we didn't look at it as you're interacting with the customer on a call center or in a branch or with a high net worth wealth manager, but across all these channels in a unified way. And we used our AI tools and our generative AI tools to assist them in every part of this journey. So that's the second piece. Third, we have very sophisticated platforms for anti-money laundering and fraud detection. And when we say that, we mean being very accurate in detecting fraud and also reducing the number of false positives that people see when they're doing fraud detection. So these are examples of where a real large, sophisticated financial institution is doing work. Here in India, for example, we've done a lot of work with Federal Bank, where they've digitized their entire customer interface using our generative AI platform. And so there are real opportunities to change the way that you build product, to change the way that you reach customers, to change the cost of doing some of these operations. For example, the cost of doing fraud detection, the cost of doing regulatory compliance. We have, for example, many banks using our generative AI tools to do summarization of new regulations and to create documentation to meet new regulatory and audit requirements. So these are different ways in which financial institutions are using AI for real now, and they've been able to improve efficiency, reduce time, change the customer relationship, and lower cost in the organization as a whole.
So Thomas, we talked a lot about the digital public rails in India and the opportunities it offers. You talked about personalization. We talked about being omni-channel. How does this all come together with AI, Gen AI? I mean, any thoughts on how financial institutions can bring it all together for the customer in a manner that actually is seamless and friction-free?
We think the important thing when you think about using technology to serve customers, particularly using AI and other advances, the first one, you need a solid foundation. And the solid foundation is organize your customer data so that you have a single view of your customer, no matter which channel they're interacting with you with. Without having a single view of your customer, if you make offers to them, if you interact with them through different channels, the customer can find that the interaction is highly fragmented and not effective. So the first thing we tell people is make sure your customer data is in a single place, organized well across all the lines of business and different products you may have. Many financial institutions organize their customer data by product as opposed to around the customer. And so we always say start first by organizing your customer information. Second, when you work with customers, we've always said, as Remy said in his presentation, look at the interaction across channels. Do not look at it as I have a digital app in which the customer may interact with me. I'm working with them separately in a branch. I work with them in a different way in the call center because customers see their interaction and want you to know them across all the channels they come in with. And the AI tools now give you the ability to do that extremely efficiently. When a customer calls the call center, it can transcribe the conversation. It can answer questions for you through a digital medium without having to have a human involved. It can assist a human if they need to bring in a human. And so this allows you to get the unified interaction model. The third thing is think about now that you have your data and you're using models to improve the efficiency with which you serve clients, make sure that the data is secure and have a strong cybersecurity foundation, particularly with new services like UPI coming in there. People who are bad actors can cause a lot of issues with your infrastructure by coming in through a cybersecurity hole you may have left behind. So you need to think about how do you keep that environment and that infrastructure secure. Lastly, when people, having worked with many Indian financial institutions and looking at the traffic pattern with things like payments, you see huge spikes in transaction flow. And you need to have an efficient infrastructure to be able to service your customers who increasingly want large number of very small transactions, and you need that to be done extremely efficiently. You will need the same infrastructure to also service regulatory analysis and regulatory control. So you need to design your system to be able to handle those, if you will, spikes in demand on your infrastructure, and that may cause you to rethink a little bit how you've designed this technology footprint.
And have you seen this, executed at players? I mean, what is your experience been in getting something which is seamless for the customer, lower cost, profitable, and also personalized?
We've seen some institutions hugely improve their conversion rates. And when I say hugely improve their conversion rates, in 3 different ways. One, improve their conversion rate in acquiring a brand new customer. 2, improve their conversion rate in cross-selling an existing customer with more products so they have a deeper relationship. And third, increasing their wallet share, not just with that individual, but also with many members of a family. I mean, if you look in overseas markets, for example, in Europe, many people switched financial institutions once in their life, which is when a parent passed away and passed on their financial reserves to their children. Otherwise, people typically had a single relationship with the bank that they had when they got direct debit of their salary, direct deposit of their salary. So how do you, in that environment, acquire new customers? Because it happens only once every so many years. And we've helped organizations use these tools to be very smart on knowing what is the information that will get a customer to try a new financial institution, that is for the first-time relationship. Once they start having a relationship with you, and if they have very simple needs, like I just need a checking account or savings account, how do you shift them from that very simple need to buying more products and services? And customers are willing to share information with the financial system and with the financial, with the financial institution they have a relationship with, if you offer them value in return. And knowing how to use technology to understand that and facilitate that exchange of value is the key to lowering your cost of acquisition, improving your retention, and deepening your relationship.
Got it. As you think about all these technologies, Thomas, one of the big concerns that people have is around data and information security. And as financial institutions adopt cloud, I mean, obviously the regulatory implications. Also, India's seen probably the startings of the new data privacy law. What would your counsel be to financial institutions as they embark on this AI and Gen AI journey?
You know, as a technology provider, we at Google and our cloud has been approved by financial regulators in 44 countries around the world. And we go through all the requirements that regulators have around audit, transparency, data security, et cetera. You should know that we invest very heavily in 3 different areas to address the needs of financial institutions. First one, to ensure that regulators are comfortable, you as a financial institution have sole control of your data. You control the location of your data. You have sole control on how it's processed. You can encrypt the data. You can encrypt the data and maintain the encryption key in a way that even Google cannot get access to it. So fully secure. You also have full transparency on access to your data. In fact, you can deny even Google access to your data. So you don't have to worry about, for example, a foreign government having a regulation and having somebody then access your data without your permission. So that's number one. Number two, we have an enormous amount of cybersecurity controls around your data to keep you secure. As an example, we protect people from almost all the threats that are emerging on the internet. We've never had, for example, a financial institution running on our cloud that's ever been compromised, ever. Third, we give financial regulators and the financial institution transparency and auditability so that when you run on this infrastructure, you have full visibility and you have the ability to run your regulatory submissions with full transparency. And we've actually addressed and gone with financial institutions to meet regulators in 39 different countries. So you should feel confident that you can depend on our infrastructure, particularly as you're shifting over to digital and need access to new tools and technologies.
Thomas, we've touched on a whole bunch of things. We've talked about the tremendous opportunity. We also talked about some of the failure modes. We talked about this notion of products, notion of actually not being omni-channel, but you also talked about how to actually make the cost and the risk side of it work out. So it's been a fascinating discussion. We could keep going on. But at this point, I just want to thank you for this wonderful exchange. I'm sure colleagues in the audience have a lot of questions. We may not have time for that. But thank you again, and
thank you.
Hope to see you again in India soon.
Thank you so much for having me.